fellow South Africans, I'm addressing you this evening.
All your years of paying tax, you helped us overcome our darkest hour. You, along with every other loyal taxpayer, helped build this nation. Thank you for every life you saved and for every risk you braved, for giving our future generation a healthy start. When you saw many of our vulnerable communities, you provided for them. When you saw our healthcare workers on the front lines battling COVID, you rose to the occasion and gave them the tools to save lives. Without your tax compliance, we wouldn't be able to fight a good fight. Thank you for contributing to the important services our vulnerable communities rely on every day. To all taxpayers and traders, continue to pay your tax because it matters to millions of South Africans who depend on it. Your tax matters.
Sanbonani Minjani, good evening everyone and welcome to Understanding Tax Obligations for Newly Registered SMME Taxpayers and Traders webinar. I am practitioner Oda, your host for this webinar, and of course I'm not alone. I'm with my sign language interpreter Jonathan. Welcome there, brother, and as always we are delighted to have you join us. Happy Entrepreneurship Month, everyone. Now, this is the period where we celebrate the innovative spirit that drives our communities and strengthens our economy. And this year's theme is Entrepreneurship is for everyone. And talking of everyone, you will be interested to know that this very same webinar will delve into the tax registration process for spaza shops, highlighting their role as part of small, medium, and micro enterprise. It is indeed a great privilege to be facilitating this webinar, and I hope that you will find your time with us informative, engaging, and valuable. The goal for tonight is to provide guidance and clarity on understanding the tax obligations, specifically for the newly registered SMME taxpayers and traders. But before we dive into the fascinating world of tax obligations, yes, you actually had me right, ladies and gentlemen. It's actually more exciting than you think. Just a few housekeeping notes that I'd like for you to take into consideration. So the moment you exit this webinar, you will be prompted to complete a quick survey. Please just take a minute of your time to complete this survey. Your feedback is golden. For all those who have questions, you're more than welcome to post them on our live Q&A bot, or you can send an email to smequestions@sars.gov.za. Please get this one right. It's SMME questions@sars.gov.za. And at all times, remember that the POPI Act rule always apply. So keep your personal information private. To our YouTube viewers, sorry, you won't be able to ask any questions. Only those who have registered on the Zoom platform will be able to do so. Load shedding got you done? No, I don't think we still have load shedding. But let's try to be real. It's like that one unwanted guest who just shows up uninvited. So if it somehow crashes the party during the course of this webinar, please don't worry. We'll keep the lights on for you because the full recording of this webinar will be made available on our SARS YouTube channel. Also, the presentations that will be presented will be made available on our SARS website later. All right, this is what we have on tonight's agenda. So we have two items. The first one will be the presentation divided into two presentations, which is the CIPC presentation and SMME tax obligations and compliance presentation. Now, trust you me, this is the meat of the matter. And of course, the last item will be the Q&A that I, your host with the most, will be facilitating with the panel of experts. This is the chance now where you will get answers to all the questions that you have. Let's get started now, shall we? Ladies and gentlemen, please join me in welcoming our keynote speaker, Andile Shabangu. Andile Shabangu began his SARS career as a compliance auditor in Customs and Excise in 2021. And in 2018, he joined the Higher Trinity Foundation as the nonprofit's financial director, and thereafter Etequini Municipality City Integrity and Investigations Unit in Forensic Investigations and Auditing in 2019. He is currently, pardon me, the chairperson of SARS Junior Board 2.0, a self-published children's book author. Andile Shabangu has a BCom accounting degree from the University of KwaZulu-Natal. He is also a certified fraud examiner. Andile, the floor is yours.
Thank you, Patu. Well, ladies and gentlemen, representatives of small, medium, and micro enterprises, or SMMEs, members of the SARS team, yes?
Oh, saying, okay, I can see you now, yeah.
Members of the SARS team, distinguished guests, and all present here today. It is both an honor and a privilege to welcome each and every one of you to this gathering aimed at empowering our vibrant SMME community. We're excited to navigate the world of tax and company registration with you. This webinar is part of SARS's efforts to not only encourage those within the SMME segments to register for tax, but to help you understand what's required of you from SARS. This is an opportunity for us to walk you through what registration is, what it looks like, why it's important, and what steps you need to take to ensure that it gets done. It's also a very realistic look at what benefits there are, as well as what consequences exist for non-compliance. Now, we live in a country whose diversity is a strength and not a weakness. It stands to reason that our economic landscape and the types of businesses that make up this exciting economic ecosystem are just as diverse. And within this diversity, it's important, or rather, it's an opportunity for us to expand our reach. So take your local spaza shops, for example. They often form an integral part of the communities they serve. In many ways, they become the great equalizer. In being such vital members of their communities, these shops have a duty to not only provide for their patrons and neighbors, but to also ensure that they give back to them as well. And that begins with registering and being tax compliant. This is a chance to not only understand what that looks like, but how we can get there together. So today, we embark on a journey that emphasizes the crucial role you play, not only in the economy, but also in shaping a sustainable and collaborative future for all South Africans. Let's begin with the fundamental component of your growth and contribution to our economy, the importance of registering your business for tax. Registration is not merely an administrative function, it's the gateway to being recognized as a legitimate player in the South African economy. When you register with SARS, you gain access to a wealth of resources, information, and support that will help you in navigating the complexities of tax compliance. This means you can focus on what truly matters, which is growing your business and serving your customers. Your registration signifies your commitment to the legal framework of our country, and it solidifies your position in a fair and equitable economic system. Now, at SARS, we understand that SMMEs are not just stakeholders. You are vital contributors to our shared aspirations for South Africa. Your innovation, your resilience, and entrepreneurial spirit drive job creation. They encourage diversity in our economy, and they stimulate local development. So each SMME serves as a building block in our nation's economic foundation. When you, as small business owners, thrive, the broader community benefits. Therefore, your alignment with our higher purpose to create a better life for all South Africans is more than synergy. It's a shared vision. Serving the communities you operate in extends to not only the services you provide them, but also contributing to a system that aims to empower, enrich, and equip them through the taxes you pay. So by registering and complying with tax obligations, you become stewards of our economic well-being, paving the way for others to follow and contribute to a robust tax base that funds essential services and infrastructure projects across the nation. Now, let's consider the importance of compliance with SARS and your tax obligations. Compliance is very often viewed through a narrow lens of bureaucracy, but it is in reality a vital pillar of economic stability. When you comply with your tax obligations, you contribute to a sustainable economic ecosystem to which we all belong. Your compliance benefits you and your dreams as well. So understanding tax obligations can empower you to make informed decisions that affect the future of your business. And as SMMEs, it's essential to recognize that tax compliance isn't just a legal requirement, it reflects your integrity and responsibility as members of this economy. It can enhance your credibility, right? Enable you to access funding, attract more customers, and grow your market presence. Moreover, staying compliant protects you from potential penalties and promotes long-term sustainability for your enterprise. To build a sustainable economic ecosystem, collaboration is key. SARS recognizes that we cannot achieve our goals in isolation. This gathering today is a testament to our commitment to actively engage with you, our SMME partners, because that's essentially what this is. It's a partnership that doesn't begin and end when you register for tax. It's a shared commitment to work together, for SARS to be invested in your goals, your stories and achievements, and your commitment to work alongside SARS in remaining compliant. We know that your success is intricately linked to ours, which is why we're here not just to enforce regulations, but to support you through various initiatives and workshops that demystify tax processes and enhance your understanding of financial compliance. The more we collaborate, the stronger our economic ecosystem becomes. So we challenge you, our small and medium enterprises, to harness the resources available to you through SARS for your growth. Now, in conclusion, I urge you to see registration with SARS not merely as an obligation, but as a stepping stone towards unlocking exponential opportunities for your business. Embrace your role in your collective economic journey. Remember that compliance is not just a legal necessity, it's our shared commitment towards the sustainable growth of our country. Together, let's cultivate a thriving environment where SMMEs can thrive and meet the moral and legal obligations we owe to ourselves, our communities, and our nation. Thank you once again for being here today, and thank you for your commitment to building a better South Africa. Now, let's work together towards a brighter future. Thank you, Patu.
Thank you so much, Mr. Shawangu. Your welcome address was spot on. Ladies and gentlemen, indeed, SMMEs are the backbone of our economy, and understanding their tax implications is very crucial. Now, with proper administration, tax responsibilities become more of a breeze. Now, let's keep the conversation going. Still got questions? Please post them on our live Q&A or send an email to smmequestions@sars.gov.za, and our panel of experts will respond to them before long. For those who just joined us now, welcome, and don't worry, the full recording of this webinar will be made available on SARS YouTube channel. What's new, you may ask? We've also got some exciting updates on e-filing, also new features such as AI Assistant that is now available on the SARS website. So why are you not staying ahead of your tax game? All right, moving on with the program. Next up is Krista from Companies and Intellectual Property Commission, who will take us through the business formation, CIPC annual returns, and deregistration process. Krista, over to you.
Good afternoon, everybody. To all of those SMEs out there, thank you so much for making the time. to be quite honest, and Dile said it so beautifully, I don't think there's anything that we can say additionally to the SME and the audience. All of us here has got a passion to serve our country. That's why we're government officials. And you can see with a passion that how we deal and do our work. So thank you very much for that. So just as a quick introduction, I am Krista Cloker. I'm a senior manager at the Companies and Intellectual Property Commission, which is a close, we are actually cousin organizations. We are not in the same family. We are in the economic cluster of government departments, while SARS is in the revenue side, the financial side. I am joined today by a dear colleague of mine, Ufentshe Shakung, and we will also be addressing some of your questions regarding new company registrations and annual returns and some other matters relating to your corporate vehicle in the chat. Right, so let me just dive in. They have given me strict timelines for a large topic. So we at the CIPC, we call it the CIPC, the Companies and Intellectual Property Commission. We are responsible for the maintenance of corporate entities, which are registered, as well as the registration amendment of intellectual property rights in the country. So we're all housed under one organization. We are different and from SARS, and we have to clearly state that. The obligations that you have as a corporate entity, a registered company, closed corporation, or cooperative is different than the obligations that you have towards SARS. But there's one commonality. There's compliance with them and there's compliance with us. So if you know that you have to do one, you need to know you need to do two. So let me just dive in some basic information regarding new company registrations. Very high level. There is a presentation prepared that you can go through at your own time. That's got a lot more information about the topics, as well as we have got a number of platforms. So if you're a registered company, closed corporation, or a cooperative, or even want to know more about intellectual property rights, please go to our website, www.cipc.co.za. You can follow us on any of our social media platforms, Facebook, LinkedIn, Twitter, even on YouTube. We post all the information that you need to stay compliant with your corporate entity. So I'm not going to say a lot about company registration. I assume that you already registered with the CIPC. And if you don't and you are interested in it, please refer to, there is a handy video done about a month ago about things to consider when you register your company. So you're not necessarily forced to register a company, that it's a must, but it is advisable that you that you have a business opportunity or a business idea already before you register. We in South Africa have a high level of dormant registrations and the businesses do not come off the ground. Even if you are registered and your business does not take off the ground or it's inactive, you are still obliged to comply with the obligations of the Companies Act. You are not excused or absolved just because you have not been doing business. So think carefully, make sure that you know what you let yourself in for. When you register a business entity, please make sure that you familiarize yourself with the requirements. As the CIPC, we have got a very handy online guide for directors to spell out, very cute little guide. You can do it at your own time. That tells you precisely what is a director, what's a company, how to manage your company, and what all your obligations are. So you can go to our main website. It's called the Learn iBiz, and it's totally free of charge. And you can do it at your own time. It even has little questionnaires so you can measure your own progress and knowledge and understanding. Also on our website, we have got lots of channels about company registration. I'm only going to refer to one because we advise SMMEs to use this portal. It is designed to assist you. It's paperless. All the validations with Home Affairs and whatever other sources is done on the platform. So there's no paperwork that you have to submit afterwards for any of your registrations. And that's our BIZ portal, www.bizportal.gov.za. It's designed for you. So please, if you're interested in registering a company, if you have not already done so and you've done your homework, you know what you're letting yourself in for, you know that you're going to have some obligations to do once a year or even when it's needed, please register. A name reservation, there's a name reservation option there as well, and then you can register your new company. It's, as I said, it's online. Name reservations may take a little bit longer than normal. It's usually less than 1 day for a name reservation, but with the spaza shop registrations that all spaza shops are required now to register as formal businesses, we have a severe spike in volumes at the moment. So just be patient. When everything is normalized, it takes you about 1 day to register and all the information that you need there. But now you are registered. What now? That's the big question. So I'm going to go into your biggest compliance obligations that you have. All of your obligations are actually spelled out for you if you're doing the Learn IBIS and it takes you through the Companies Act and your duties. When you register, you get something that's called a welcoming letter. It tells you high level your biggest compliance obligations. There are others as well, but we don't want to overburden. And also how to contact the CIPC. So your big obligations is to make sure that CIPC is up to date at all times with your latest information, especially that of the director's contact details, because we send reminders, we send you notices for when we place you into deregistration, when there's big things that's happening in the economy, we tell you that, oh, you're still outstanding with this, please comply. We issue we even send SMSs for all of these things. If you don't get those, it means that your contact details with us is outdated. Please go to the BIS portal and update your director details via the director amendment process, please. It's going to help you to stay compliant. Then the other thing as well is, with all of these, your contact details, as I state, the Learn IBIS, and keep record of all your information. Now, once you are registered, it's like giving birth to your child. It's a business, but it's yours. We know that South Africans are extremely passionate about their businesses. Their names that they select for the businesses reflect their personal goals and values, and as family aspiration and lineage. So we are very attached to our corporate businesses. But just like you care for your child, you have to care for your corporate entity, your company. You can land up in a lot of trouble if you don't comply, but I'm going to take you quickly through. So the biggest compliance obligations that happens once a year, only once a year, is your annual return. So what we have done is we have clumped, in terms of the legislation, your filing of your annual return together with your duty to file beneficial ownership and a basic financial information, clumped together, that you have to only come in once a year to get all of that updated, check that everything is still relevant, and you pay your annual fee and you are sorted for the year. So the annual return is like a checkpoint to see, are you still up to date? Why not? Do I need to update something? It's fully online via multiple channels. We pre-populate the information for you, so you just have to double check to say that everything is still sharp. If there's a change needed, then you file the change. Most of the changes that you can file are free of charge, but you do have to pay for the annual return. It's a minimum fee of 100 Rand. It's 100 Rand. It is cheaper than registering a new business. So take care of your baby, diarize your baby's birthday, and then comply with all of these things. So now you've done your annual returns, or maybe you forgot. You've got 2 chances, 2 years that you don't have to file before we trigger what we call an annual return deregistration. So we use your data to check whether you are active in the economy. The data that CIPC holds regarding corporate entities are used to establish a sustainable and effective business environment. Foreign nationals, if they want to do business in South Africa, want to know with whom they are doing business with. Government wants to have statistics to know where our business are growing, so they can, when they can where they need to put resources for. Because if there's a spike in businesses in a specific area, that means people are going to move to that area. They're going to need resources. They're going to need schools, security. But if CIPC is responsible for that data, we don't know that you have moved the location of your business. We can't inform government in order to funnel that funding correctly. So if we don't know, they won't know, and we actually can waste taxpayers' money. The money that SARS works very hard to collect from you to run these services may go to waste at the end. So that's one of the key things as to why the registry is. You have an additional benefit if you keep your information up to date with the CIPC. When you do business with somebody, you want to know who you're doing business with, right? You want to know who the director is. You want to know where the physical address is if you need to go there to sort matters out. So you want that from them, but they want the same from you. They want to know that they're doing business with a legitimate business. They want to know that if I come and stand in front of them and say, let's do business, they want to know that I actually am representing the company, and vice versa. And that's the importance that the registry is, that the company and the Intellectual Property Commission holds. It's that value. Foreign investors look at our registry to find out who's who, what type of growth there are. Is there growth opportunities in it? Is it a compliant business environment? No foreign investor wants to come invest in a country where there's no compliance. They don't know who they're business with, and there's no accountability. And that is the role of CIPC as a regulator. We provide that stability to the country to unlock foreign investments and create a viable environment where everybody knows who they are doing business with. And that's the value of annual returns. Now, let's say you did land up in a little bit of hot water. You went through a very tough time. You actually forgot to file your annual returns. As I state, you've got 2 years to comply, right? If by year 2, you have not filed your annual returns, we will start something called the annual return deregistration, whereby we assume that you're inactive because you've not indicated to us that you are active. And then we'll start the deregistration process. We'll change the status on our registry to AR deregistration. That's also used as a risk indicator to the banks and other service providers that you may be ending your life, that the corporate entity may be ending its life cycle. And it's a risk indicator like, be careful before you do business. So a lot of times you'll end up in that status, and the banks or whoever say, I can't do business with you at the moment. Go attend to your compliance duties. That's filing your annual returns. So let's say that didn't happen and you continued with the deregistration. We will give you the notices to tell that you're on deregistration. Again, if you've got your correct contact details, but you have not filed, then we will place you into what we call final deregistration. Your legal entity that exists like this breaks away. It no longer exists and you are not protected. So final deregistration has got the consequences that it exposes you as the director to personal liability. So let's say in this business, there was a property, immovable property, your house is registered in the name of the business, and now the business is finally deregistered. You are exposed as the director for paying the debts of that company. Service providers may stop doing business with you. Creditors may refuse to pay you because the legal entity does not exist in order to receive those payments or conduct any services. But there is good news. You can reinstate, provided that you were active at the time of the deregistration or you had other economic value. We do not place you back on the registry if you were dormant at the time of deregistration. And this is one of the other key points that is very, very important regarding dormancy. Even if you were dormant, you are still required to comply with all the obligations of the Companies Act, annual return filings with that beneficial ownership and your financial information. Dormancy, sorry, my apologies. If you are dormant and we don't clean you off, it puts you at the risk for this company to be used for money laundering, terror financing, or any other criminal crimes. Right? And you don't want to do that. So dormant companies, closed corporations and cooperatives is at risk to be used for those purposes. And that's the other reason why we're cleaning it off. It's also a requirement from international global standards that we need to keep a clean registry, and you will be deregistered because of that dormancy. Right, that ends the annual return deregistration discussion. Serious consequences, comply. We try to make it as easy as possible for you. Now, let's say you run your business and it happens that economic circumstances change, right? You don't have that business opportunity anymore. You can voluntarily decide, or the directors of the company can voluntarily decide to deregister itself. So there is a procedure for that. The company, the majority of the directors have to make a decision, write a letter to us to say that it's dormant. There's no obligation, outstanding tax obligations. Remember, there's no outstanding tax obligations. You cannot hide from SARS. They are going to object to your final to your deregistration. You cannot hide from them. We work very closely with them. They monitor us like a hawk. So you can apply later. There's some evidence that you have to put in, some director's ID copies that are certified, a tax clearance certificate to confirm that you are no longer, that you don't have any outstanding tax obligations, and a letter. The letter must have specific wording. You email it to deregistrations@cipc.co.za. Once we received and we've checked the documents, we will effect a status change called voluntary deregistration. You're still legally existing, and it takes about 4 months to complete the process of issuing letters and notifications for possible objection to the final deregistration. If we don't receive an objection, we will finally deregister it, and then the corporate entity is removed. Unfortunately, at this point in time, it's a very old system. It's up for renewal early next year. So then we're going to automate it and build in some more information and notifications in the process. But currently, it doesn't issue notification that you have been finally deregistered. So if you pick up that you are finally deregistered, you can check on the BIS portal, on a BIS profile, to check the status. And if you need the letter, I know SARS requires the letter, and we're working closely together to see whether we can cut out that formal letter between ourselves. You can ask for the letter, and the letter will be provided that you can give it to SARS. Remember, just because you are deregistered for annual returns or voluntary deregistration on the side of CIPC doesn't mean that your tax obligations is also cancelled, right? SARS has got their own rules, their own policies, and their own legislation that they have to comply with. So you have to make sure, if you are deregistered, annual return or voluntary, that your affairs with CIPC is sorted, with SARS is sorted, with your creditors are sorted, and any other regulator that you may have been dealings with. For example, the municipality, if you had to register for a permit, if you had employees, the UIF, workman compensation, you have to make sure that all of your matters are updated with them and that they close the accounts correctly on all of their sites. So that is voluntary deregistration, and I'm almost to an end. So in the slides, there's how to contact the CIPC. And what I have included as well in the slides is some high-level support organizations that provides financial as well as non-financial support. There's a real need in our economy for SMMEs that has got valid business ideas and valid businesses to start them or to grow them to get support. So please go through the list at CEDA, there's CFAB, there's National Youth Development Agency, there's the Innovation Bridge, there's the National Small Business Council, there's the SME Launch. There is so many of them. So please, if you need support, do a bit of research, contact those organizations and see how they can help you to grow your business. Because if you grow, you can employ more people, and with that, our economy flourishes. Thank you so much for the time.
Thank you so much, Krista. We really appreciate your time. I don't like wasting time, but before we continue the program, I'd like to acknowledge our new sign language interpreter. Welcome, Kamohelo. Good to see you there, brother. All right, moving on with the program. Next up is Lindsay Kutia, who will dive into the nitty-gritty of SMME tax obligations. So ladies and gentlemen, please do get ready to take some notes. All right. Lindsay Kutia started working at Cape Provincial Administration in November 1984 in the Finance Division, and subsequently resigned in August 1990 and joined the then Receiver of Revenue in September 1990. She started working in editing and then moved to Assessing Division, where she was responsible for individuals, companies, and trusts. In 2002, she moved to the newly formed Taxpayer Education Division and currently is still to find herself under the Tax-Based Broadening and Education Division. Lindsay, the floor is yours.
Good evening, ladies and gentlemen. Sorry, there was just a glitch. I didn't expect that to happen with my workshop, or with my presentation. Thank you for that introduction, Program Director. As I say, good evening, ladies and gentlemen, SMMEs, aspiring businesses, traders, including, of course, our spaza shop owners. I will be diving into the presentation. I've been listening attentively to Krista, and it's amazing how it is showing us, or the obligation to CIPC is very much the same as SARS. We were talking about, yes, you need to, you're going to have to deregister, and you have to be fully up to date with SARS. You need to make sure that you're fully compliant. You're going to have to then issue, or you're going to have a tax clearance insofar as when it comes to do your deregistration process. So basically, in order for you to deregister with SARS or to deregister with CIPC, you're going to have to be fully compliant with us. So I would like to share with you, and I'm going to dive into this presentation. So bear with me as I go in and I share this presentation with you. Just bear with me a second. Somehow along the way, it just got stuck. So let's have a look. All right. So we are going to understand the top tax obligations for newly registered SMMEs. So let's have a look. First of all, what is our purpose and mission? The presentation is merely, and I need to go through this with you. The presentation is merely to provide information in an easily understandable format, and is intended to make the provisions of the legislation more accessible. The information, therefore, has no binding legal effect, and the relevant legislation must be consulted in the event of any doubt as to the meaning or application of any provision. Now, in saying that, I just need to share with you that legislation actively changes every year. Not almost every year, but it can change in the year, in the month, or whatever. Things change. For example, the tax tables change, the thresholds change. That normally happens when the minister reads the budget speech in the last, or the second, I think it's the second last Wednesday of February. So always changes have been or are implemented. So we need to consult the legal or the relevant legislation, just to make sure that what we are maybe querying, or what we're not certain about, is in the legislation. And then what is our mission? Our mission is derived from our legal mandate that is crafted in the SARS Act in 1997, to ensure that the tax and customs revenue due to the state is collected as and when it becomes due, by building a higher level of tax compliance and facilitating legitimate trade. Okay, so what is our points of discussion tonight? Our points of discussion is, well, I've done the introduction, our types of businesses, what kind of businesses are there? And Krista was saying, yes, you know, when you're now going to register either your PTY or maybe your cooperative, but also from a SARS perspective, we see a sole trader as a business. So you are, for SARS purposes, you are not reserving the name at CIPC. However, you are a sole trader, so you are trading as. So you still retain your tax number. You could possibly have been working and then decided, no, this thing is not for you anymore. I'm now going to go out and I have a passion for a certain trade, and I'm now going to trade as a sole proprietor, a sole trader. So in other words, I don't go to CIPC and do the whole registration process through them. I just inform SARS that I am now going to be trading as I'm going to be Lindsay, trading as Lindsay's Corner Shop. So I remain myself for tax purposes. The only thing is I'm no longer employed in formal employment. So there's nobody now every month deducting that huge amounts of tax from my salary. I am responsible basically I'm responsible for paying my taxes. And then we're going to look, how do we pay tax? Because remember, a business, a legal entity, needs to pay tax, but then also a sole proprietor or otherwise maybe a partnership, they have to also pay income tax. So it all falls under the ambit of pay as you earn. So how do we do that? How do we pay provisional tax? We pay provisional tax on a 6-monthly basis. So we basically pay the provisional tax to SARS twice a month. So nobody expects the sole trader to come in every month and come pay their taxes based on their income. We allow you to make that payment twice a year based on the income you received. Now, also bear in mind that tax isn't calculated on a monthly basis or a 6-monthly basis. It's calculated on a yearly basis. So you're going to say to me, okay, but how will I know what I've earned? Nobody knows what they're going to earn for the year unless you are employed. So we then say you can estimate an income for that period that you've or that tax year. An estimation is allowed to be done, but as close as possible to what you have earned. All right. And then we talk about the registered representative. And I know Krista also mentioned that you need to keep your details updated with them, and so with us. So if there's a change of the registered representative, now remember, your company, your PTY can't walk into SARS or phone SARS or email SARS and say, I need to sort out my business. There is somebody that must represent that business. So that is the person who is appointed as the registered representative. We need to know who that person is, and there's certain documentation. If there is changes in the registered representative, alternatively or ultimately, you need to advise us of those changes. And that comes down to, again, it was mentioned in the previous talk or the previous presentation, updating your details. Now, with us, it's almost a form of compliance. You need to update your personal details. Be you the registered representative, be you a sole trader, be you in a partnership, you would need to then let us know, oh, I've changed my cell phone number. I do work on a day-to-day basis sometimes with clients. They will come and sit in front of us and they'll say, or sit in front of me, and then I'll say, sir, is your number whatever, 07, whatever. And then they'll say, but no, ma'am, that number that phone was stolen 3 years ago. But I've had 2 other numbers since, but this is my current number. So it's very important for you to update those details, because how do we communicate with you? How do we send notifications? How do we send assessments? And how important is this? Because how do we let you know there's returns outstanding, maybe in your personal capacity. There's returns outstanding for your business. There is debt that is outstanding. There's penalties that have been levied due to the fact that you have not submitted your tax returns. The penalties are for non-submission, or alternatively, the penalties are for late submission because you didn't submit or you didn't pay on time. So now we have penalties imposed. And on top of that, we have interest. So it's vital that we, as SARS, you need to put us also on that list, your debtors list. I don't think people want to put anything or let their debtors know that they've changed their numbers, but put us on your list as well when you make changes. Then we're also going to look at PAYE and VAT. So when do we register for these two taxes, right? They're separate from income tax. And also bear in mind, you cannot be registered for these two taxes if you are not registered for income tax. So that's your first port of call. So also, once your registration has happened with CIPC, what happens? They inform SARS, and then you are automatically registered for income tax. Now, the income tax number will always start with a 9. A PAYE number will always start with a 7, and a VAT number will always start with a 4. And then we're looking again at our SMMEs, our traders, our shops, our spaza shops. And what's important? A tax clearance certificate or a status. Tax clearance, we used to call it certificate. Now it's TCS, is your tax clearance status. How important is that? If you want to trade with other businesses, if you want to do international transfers, all of that is very important. I need a tax clearance. I want to do business with government. I need to be on the database. In saying that, I need to be compliant. So how do we pick that up? Most times people come for a compliance certificate, or they go onto e-filing and they want to do their TCS, and then they go check, oh, I've got penalties, there's outstanding returns, there's outstanding declarations. So that is very important. That's vital. And I think the crux of this whole presentation or this whole talk is about tax compliance. The tax incentives, there's also incentives for small business. In other words, we are saying there's a bit of tax incentives, there's a bit of tax relief. There is availability to have that cash flow in your business. However, we need to know about them. We obviously need to have somebody, a practitioner, a tax practitioner, doing our taxes. They need to do the returns for CIPC as well as for the ITR 14, which is your declaration. So it's very important that we also know about it, that we can refer it to the person that is assisting us, to the company that's assisting us. Maybe I qualify to be a small business corporation for tax purposes. So it's a good thing to know about that as well. And then, of course, we're going to look at our channels of engagement. So the introduction is SMMEs are vital to the South African economy, contributing significantly to employment. I think the small businesses do create employment, which is a vital part of the growth and social stability. SARS plays a crucial role in supporting these enterprises through simplified tax regimes. And remember, we are also there to assist you. There's so much information on the website, on YouTube. Everything is there, and it is a simplified way. We're making tax easier, and also, of course, with our digital channels. And then also by addressing the challenges faced by SMMEs and providing support. Now, there I spoke earlier on about your sole trader. The sole trader is taxed according to the prescribed tax rates. So bear in mind the tax rates are the rates are between 18 and 45%. The tables are again available on the SARS website. So you can go look, where do I slot in as a sole proprietor? But I also, as a sole proprietor, I am a person, and for tax purposes, I remain that person, even though I am the shop, the corner shop, the spaza shop, or I'm a plumber. I still remain Lindsay, trading as Lindsay's corner cafe or corner shop. So remember, I still am the person. I still have to be taxed according to the profit that I make. And then a lot of people say, but you know, when you start up business, it's just not always profit. There is initial startup costs. There is other things that need to be taken into account. There's assets to be bought. Yes. So initially, no business goes in with a huge profit, but also bear in mind there could even be a loss situation. So we don't say, okay, we don't want to know about that. We're just going to accept that there is been no income in your business. We would like to see how you got to that, or how you attained that loss. How was that loss calculated? And that loss then will be carried forward until such time there is a profit in the business. But also bear in mind, we can't expect a loss every year. Sometime there must be some form of income. And then a partnership is almost the same. It's a legal agreement between yourself and whoever you're in partnership with. I just say don't go in with family. I always laugh about that. So if we are in a 50-50 partnership, then obviously we will be taxed according to the income that we receive, the portion of the profit, our taxable, or our 50% of the income, we will be taxed accordingly. A trust, it's a very high rate of tax, that is at 45%. And then of course your company, it's very interesting when sometimes we do these workshops and we tell the companies, or we speak to small business or aspiring business, and we say, do you know what is the tax rate? And sometimes they don't know that. It's a very scary aspect to me, because surely if you start up a business, you need to know what tax you're going to be paying. So tax at a standard rate of 27%. So that means on your first rand of profit, you will be paying SARS 27 cents. Now, all entities must be registered for income tax. I did mention that earlier. You cannot be registered for any other taxes unless you are registered for income tax. So companies registered with CIPC are automatically registered for companies, for companies tax, which is we call that CIT. Sole traders and partners must register for personal income tax, which you can do on e-filing. Then you can actually continue with that on e-filing, and then you would subsequently complete your provisional tax forms or your provisional tax declarations. Trust register with the Master of the High Court, and after registration, it makes, as Krista said, after registration, you must comply with SARS, firstly, and with the CIPC regulations. So there we go. Your declaration, when you are registered or your company is registered, you need to then declare your income to us. You need to show us this is our income versus our expenses. The expenses, we will check, are those expenses in line with your income? You cannot claim, obviously, personal expenses, which people, I don't understand. Sometimes they have all their personal expenses running through a business, which obviously is not allowed. And it says, when is it due? It's called an ITR 14. It's due 12 months after the company's financial year end. Also bear in mind, a financial year of a company is not the same as a natural person. A natural person's year is always going to be from the 1st of March up until the 28th of February the following year. So we are basically laying at the moment in the 2025 tax year, which then ends on the 28th of March 2025. So personal income tax and ITR 12, that is income tax return for 12 months, that is for a natural person. For myself, I submit a tax return based on my income. Now, very important, failure to submit that returns will attract admin penalties. Now, also, when we look at the provisional returns, I said earlier on, it will be twice a year. That is the end of August and the end of February. And there's also a additional payment that can be made if you feel that you have not paid enough taxes. When do you make payment? You make payment 30 days after your assessment has been issued. And then the deregistration, again, very important, deregistration can only be initiated after the company or closed corporation has been deregistered with CIPC. Now, in saying that, how important is the tax clearance status? You need to give CIPC the tax clearance status. So saying again that your tax returns have to be up to date, all debt has to be settled. And if it was that you have not been, or the business hasn't been operational, you would then have to do a null return to submit those returns. Provisional tax, I spoke about that earlier as well. It's not a separate tax. It's just a way, if we call it a way to pay. It's a method of paying tax due to ensure that the taxpayer does not have large amounts on assessment. It requires the taxpayer to pay at least 2 amounts in advance during the year of assessment, which are based on estimated taxable income. Then there's a third payment, which I said was optional. And that third payment is if you feel I've underestimated, because like I said earlier on, if you noted, we do not calculate tax on a month-to-month basis. Tax is calculated on a yearly basis. And also, at the last line here, it says penalties will be levied for under-declaration and late payments of provisional tax. So under-declaration, if you haven't estimated, if your income is grossly underestimated, we have the right to penalize you for that gross or for that underestimation. Okay, so registering a registered representative, which is your RR, it's by completing our SARS online system on the SARS website. The taxpayer needs to book an appointment via, there we go, our online booking channels, e-booking system to register as a registered representative, or you can go onto e-filing. Subsequently, there you can go onto the SARS website. It says there, www.gov.za, client segments, registered representatives. Okay, then we also spoke earlier on about updating your personal particulars. It is crucial that you keep your personal details, such as your banking details, your physical address, your email address, and your cell phone number updated with SARS. And that's also important when it comes to registering on e-filing. When you originally registered with SARS, you might have given us details, you might have given us a cell phone number, you might have given us an email address or your banking details or your physical address. And since then, you have changed all those details. It's very difficult then to register with SARS or register on e-filing if you are going to have, if your details have changed, because e-filing is going to go on the details that we've got on the system. However, you have subsequently changed all those details. So how important is that? It's very important. It's vital for you to update all your details with us. It says the accurate contact information ensures that you receive all the necessary correspondence and updates regarding your tax status. Okay, so first of all, before you've logged on to e-filing, you have to register for e-filing. And that is why I'm saying to you, it's very important for you to update your personal particulars or all your details, your banking details, your address, and so forth and so forth. All right, pay as you earn. PAYE. It's not pay as you go, it's pay as you earn. You only register for PAYE if there is tax to be deducted. Very important. So if you've started a business, if you're even you're a sole trader and you've got maybe people working for you and your employees are not liable for tax, to pay tax on their income, then you would only register once that actually happens. So when do you do that? You first register, you do the registration on your you do the registration on the RAV01 on e-filing. Then every month the declaration is called an EMP 201 to be paid by the 7th of the next month. Just don't get it confused with UIF. Remember, UIF is completely different. That is the 24-hour the 24 hours a week. So if a employee is working for you and they're not taxable, they only maybe earn 6,000 Rand a month, which is not taxable, then you will not register for PAYE up until the time that the employee becomes taxable, or you are drawing the salary from the business that is taxable. All right. Then we look at VAT. Now VAT, there's two categories. VAT, it says the registration, you would register for VAT if you are, well, you're compelled to register for VAT if your taxable supplies in a 12-month period or less than a 12-month period is 1 million, okay, equal to or over 1 million. However, voluntary registration is also available. Now, years ago, the taxpayers or the businesses used to come to us and say, oh, the big business don't want to do business with us because we are not VAT registered. So there is that opportunity for you to register voluntary for VAT. However, you need that 50,000 they talk about, the taxable supplies. You have to prove that to us. You have to prove that to SARS and say, there's my invoices. There's my banking details. This shows here my income or my transactions that have occurred for me to have attained the 50,000. SARS, however, can refuse a voluntary registration if you do not have a bank account for the actual business, and you do not have a proper address, a address where the business is operating from. So we can refuse the voluntary registration, or we can also say that maybe you have not fulfilled the obligations of a vendor prior to, or maybe before. So we can refuse the voluntary. However, the compulsory registration, we cannot refuse because we are compelling you to do it. So then you just need to complete or you have to supply all the documentation, all the necessary documentation. Also, VAT is an administrative burden if it's not necessary for you to register at the time. So, you must, there's a lot of other things. You're running a business. Now you also go register for VAT. Maybe at that point, you might not have any input, output. It might not be working that way. So you need to consider this whole VAT registration. When should I register? I have to register after the million, but the voluntary registration is something you need to consider because of the administrative side of it as well. They say you have to make the payment before the 25th. So you've basically got, if you're on a category A or B, that's every 2 months, you've basically got 2 months plus 25 days in order to make your payment. So it says e-filing declaration. So if you're registered on e-filing and your business is on e-filing, so you are maybe, you are the sole trader, you registered and you've added your business as an organization to your to your e-filing profile. It says you can declare, obviously you can make your declarations, which is your VAT 201, and then you pay on or before the last business day of the month. And or your declaration, sorry, and then your payment is the 25th of the month as well. Or on e-filing declarations, you can make your last payment, or you make your payment the last business day of the month. I just need to also reiterate there that if the 25th is on a Friday, and no, sorry, I lie. Pardon me, let me correct myself. If the 25th is on the Sunday or on the Saturday, then you would have to do the declaration as well as the payment on the Friday. And then, of course, deregistration, vendors who have ceased trading, and then who wish to apply for deregistration on voluntary registration. So, or maybe you have stopped the business, so then you have to make sure that everything is up to date. all the returns are in, all the monies have been paid, all penalties, if there is, have been, all the debt has been settled, then you can go ahead with the deregistration process. And then your obligations as an SMME, you must be cooperative, honest and truthful in your dealings with SARS. So no underestimation of income, no overstating your expenses. Provide accurate information. And if SARS asks you for documentation, or if SARS, or if you have to submit your return by the 25th of the month, please do that, because all you do is attract penalties and subsequently you attract interest. Submit your returns, pay your taxes. You don't want to give or pay out more money than is due. Keep sufficient records. We might ask you, we need to peruse your documents for 2024, or we need to see your logbook for 2023, or this invoice of this purchase, this asset that you've purchased in your business. We need to see that invoice, or the HP document, the hire purchase of the motor vehicle that you have in your business, or the bakkie that you're driving in your business. So please keep all your records it says there, for a sufficient amount of time, keep sufficient records, and then also understand and appreciate the risk of non-compliance or evasion. Remember, tax evasion is illegal. You can be penalized, you can pay huge fines. So please make sure that you, again, are honest in your dealings, and you don't understate your income or overstate the expenses. All right. Now, this is your TCS. Where do we get that? We can also find that on e-filing. How does it work? The tax compliance or TCS system allows taxpayers to obtain a TCS PIN in real time. So if you go onto the system and you go under TCS and you put in your details, this all happens in real time. It will tell you, it's on, if you look at the screen on your right-hand side, it will show you your lights. So they're robots. So it says green for go and red for stop. In other words, if everything is green, then you're 100% compliant with SARS. If there is a red robot, then you need to go and see, why is there a red robot? Oh, I haven't submitted my return for 2023. It will tell you. Or I have outstanding penalties because I never submitted my 2023 ITR 14 or ITR 12. So it tells you in real time. And then if you are compliant, it issues you a PIN. So what are the options? You get the good standing, and then you also get an approval for international transfers. So where do you request TCS? TCS can be requested via SARS e-filing, the Mobi app, or SARS online query system, which is our SOQS, we call it SOX. Okay, so bear in mind, you need to be sure, or you can go check on your status to see, oh my goodness, now I know what's going on. I can see my return for 2023 is outstanding. So then you can take action to make sure that you are clear. All right, so our tax incentives. Turnover tax. What is turnover tax?
Did you know that as a small business, you can pay zero tax? Yes, you had that right. Zero tax for small businesses. Joining us today is Ms. Thando, our tax specialist, to help us understand that as small businesses, as much as you need to submit your tax returns, it does not mean you have to pay taxes. Ms. Thando, thank you so much for joining us today.
Good day, Mandy, and thank you very much. It's my pleasure to be part of today's episode.
The burning question in all our minds, is zero tax even possible for small businesses?
Yes, very much possible, Mandy. All you need to know is how much a small business makes in a year. As a small business, you may qualify to pay zero tax if you make between 0 and 335,000 Rand on your total income from selling goods and rendering services. And you should not worry if your amount is less than this amount. You still qualify for low taxes. So if you make between 335,000 Rand and 500,000 Rand, you only pay 1%. And then should you make more than 500,000 Rand, but not more than 750,000 Rand, then you only pay 2%. And then should you make more than 750,000 Rand, then you pay 3%.
Wow, that is very interesting. Paying zero tax legally. How do I register for this exciting opportunity?
Easy. Qualifying small businesses with an annual turnover of R1 million or less may apply to register. Simply complete the turnover tax form, which is known as the TT01 form, available for download on the SARS website. And then once you've completed the form, which is the TT01, kindly submit it using the following channels, which is 1, the SARS branch. And this is after booking an appointment via the e-booking system on the SARS website, or 2, via email. So if you're a tax practitioner, kindly use the email address ppc@sars.gov.za, and if you're a taxpayer, use the contact us at sars.gov.za.
Is it that simple to switch over to turnover tax?
Definitely. Obey the law and pay zero tax if your income is less than 335,000 Rand, or up to 3% tax if your income is more than 335,000 Rand.
Okay. But is obeying the law simply paying low taxes, or do I need to submit any more documents?
Another big advantage of being registered for turnover tax is that you've got less admin of keeping documents, and you've got more time running your business. So all you need to keep is the following documents for a minimum of 5 years. So the first one will be the records of all amounts received. The other one will be a list of each asset with a cost price more than 10,000 Rand at the end of each tax year. Or the last one will be a list of each liability with a cost price of 10,000 Rand at the end of each tax year.
And then how do I submit my returns?
You must submit your turnover tax return, which is the TT03, either during the individual or company's tax season.
In case I then need to make payments, how do I pay?
There are 3 payment dates, Mandy. So the first payment date is usually due on the last business day of August. Second payment is due on the last business day of February. And then the final payment is usually after the annual tax turnover tax return, which is the TT03, after it has been submitted and processed. Do note that the first 2 payments must be made based on the estimated taxable turnover that the business expects to make in that specific tax year.
Great. And then the last question, please. Are qualifying small businesses immune to penalties?
A big no. The best way to avoid penalties and stay compliant is by being on time with your tax return submissions, as well as payment, if it's applicable, that is.
Okay. Ms. Tando, thank you so much for educating us on this exciting opportunity for micro businesses. Where can we find more information?
Thank you so much, Mandy, for having me on the show today. So for more information on turnover tax, our taxpayers can visit our turnover tax page on the SARS website, or they can simply watch a comprehensive video on the SARS TV YouTube channel.
To our taxpayers, there you have it. Please spread this word with other taxpayers. This brings us to the end of our session. If you've missed some parts of the show or simply want to rewatch, please head over to our SARS TV channel on YouTube. See you on the next episode. Enjoy. Did you know that as a small
Thank you for that video, or I hope that has enlightened you a little bit more about turnover tax. I'm going to go through it a little bit more with you. It says that turnover tax, or TT as we call it, is a single tax system which taxes turnover and not profit. So if you were listening in the video, it said to you that you have to keep records of your income. Okay, you don't have to supply your expenses. You just need to keep records of income, and you need to keep records of the assets that are more than or over 10,000 Rand. So that is the qualifying, that is what you need to do. So it does lessen the administrative burden. And isn't that wonderful? Between 0 and 335,000, you won't be paying any tax on your turnover. It is optional to businesses with a qualifying turnover of R1 million or less. So bear in mind, if your income, or your turnover is less than R1 million, you could qualify for turnover tax. So how do you go about it? You complete the TT01 application form if you qualify. And then you can go to the channels. You can use our e-booking system to visit the SARS branch. You can go to PCC@SARS, that's for the tax practitioners, pcc@sars.gov.za for tax practitioners, as I said. Or you can go to contact us at sars.gov.za for all other taxpayers. Now, I've also just taken a document from the system. If you feel that you do qualify and you want to make 100% sure, you can go onto our SARS website, onto www.sars.gov.za, and you can put in then qualifying or qualifying for turnover tax as a business, or do I qualify? Also, just bear in mind that you as a sole proprietor, as a partnership, can also qualify for this option. So then there's some questions. I just want to go through them. Basically, if you say no to these questions, you would obviously have fallen out the bus and your business will not qualify. It says, is your turnover less than or equal to $1 million? Do you declare that the business is not a personal service provider? Does the business trade in one of the following forms, like I said earlier on, a sole proprietor, a partnership, the old closed corporation, a cooperative, or a company? If the business is a partnership, do you declare that all the partners will be individuals throughout the year of assessment? And the same thing with a partnership. You need to note that if you are in a partnership and your partner is a partner in another partnership, that sounds very complicated. So me, Lindsay, is a partner with my husband, but my husband is a partner in another partnership. I can still qualify for the turnover tax option, but he won't qualify because he has other business interests. Okay, it says there, if the business or closed corporation, cooperative, or company, do you declare that all the shareholders are natural or will be individuals throughout the year of assessment? So it's just basically saying that you cannot have another business that has interest in your business. So then the shareholders must be individuals. Do you declare that the business is not public benefit organization, recreational club, or do you declare that the business is not a public benefit organization, recreational club, association of persons, or a small business funding entity? Now, they have their own special tax relief, for example, a PBO and so on and so forth. Does the business of the year have, or does the business have a year of assessment that ends on the last day of February? I'm not going to go through too much more of that, but if the business has a different financial year end, then you would have to apply to SARS to change the year end till February. And then you cannot have shareholding in other companies, but you can have shareholding on, for example, the Johannesburg Stock Exchange, those kind of things. So that is what turnover tax really comes down to. And I think if you're a small business, I really think that it is beneficial and it will help you initially because there's not such an administrative burden and the tax rates are much lower. All right. Now, this is another incentive for small business, which you can then, once you have started your business, you can maybe address it with the person that's assisting you, your bookkeeper, your tax prac, whoever it may be. SPC is not another type of business entity, but an incentive. So you don't get an SPC business, not a small business corporation. It's a tax entity, not a business entity, right? And then one of the qualifying criteria is that the turnover must be equal to or less than 20 million. And there's a lot of benefits involved. Like, for example, if you're in the process of manufacturing, the plant machinery can be written off immediately. So used in the machinery that's used to manufacture, maybe you do manufacture jewelry, or you manufacture plant machinery, or whatever it may be. I can't think of something right now. That manufacturing assets can be written off straight away. It's immediate write-off. And then other assets in the business can be written off on a 50/50 30-20 basis. And then there are lower tax rates for small business corporation incentives. That is between 0 and 27%. It is a lower rate. You actually have a split rate of tax. And then you also get ETI, which is an employment incentive from SARS it encourages your employers to hire young and less experienced workers by reducing the amount of pay as you earn that the employer would need to pay. In other words, we encourage, just think about it. I remember when I left school, it was all about you need to have experience to get employment. You need to have experience in A, B, and C. But where do you get that experience if you haven't been employed before? So this is encouraging employers to maybe upskill those employees so that they can get employment. And in doing that, SARS gives them a benefit against their pay as you earn. All right, our channels of engagement, the branch office. You can go onto our digital platforms, which is our Mobi app. You can go to contact us at sars.gov.za. You can go to SOQS. You can also contact our contact or call center. And then ultimately you can go on to e-filing. Remember, with e-filing, SARS will normally tell you, please, there's a lot of fraudsters out there. Don't go click on anything. If somebody says, or if you get an SMS or you get an email that says, please click here because we owe you X amount or whatever. Remember, there's a lot of people that come to us and show us these SMSs or these, maybe these emails where it says, but you are due a refund of 10,000 Rand, but you haven't worked for the year. There's no tax being involved. So how can you be receiving a refund? So please, all correspondence will always be, we will send you an SMS to say, please go onto or an email, please open up e-filing. There is correspondence for you. Or go into e-filing, there is an assessment. So please don't go and click anywhere where it says click here, click there. And that 9 times out of 10, it's not from SARS. All right, record keeping. All taxpayers, including individuals, businesses, and traders, are required to maintain a variety of records that fall into several broad categories, including financial, transactional, and operational documentation. Records must be retained for at least 5 years.
It compromises at least 4 ethical codes, so I'm going to have to say no on this one.
Doc, please, no.
Apologies about that.
How are you?
But you may continue, Lindsay.
Sorry, I was just a little bit confused. I was looking at my cell phone now. Records must be retained for at least 5 years from the date of submission of a tax return or declaration. In cases of an audit or investigation, remember, you might submit your return, and if you see once your submission has taken place, you will see you have submitted your return. This is the assessment, or you've submitted the return for 2024. The assessment has been done. There's either due by you or due to you, and sometimes it says audit Y or N. So if it's saying Y, then audit will require you to submit certain documentation.
Hi, Lindsay.
In the case, yes.
Yeah, Krista, if you can hear me, please mute yourself. I think that the sound is coming from your side. Thank you. You can continue, Lindsay.
Thank you. In the case of an audit, let's get back there, or an investigation, records must be preserved until the matter is resolved, even if it exceeds that 5-year period. All right. And lastly, we are going digital, as you know. We have made it easier for you with our digital platforms. So we can go onto the SARS Mobi app And remember what I said, it's very important if you want to register on the Mobi app or on e-filing, you have to make sure that the particulars that you're going to be registering with is the particulars we have on the system. Otherwise, it becomes difficult, and then they ask you to please submit documentation. Sometimes you have to, the documentation is you holding your ID, and you have to submit proof of address and maybe your banking details. So make sure that you have updated all your particulars before you go onto that registration process. Your SARS online query system, you can use USSD where you dial *134 *7277 hash, or you can go onto SARS WhatsApp 0800 11 7277. And then all you have to do is obviously once you've done that, once you've gone onto the WhatsApp, you will say hello, and then you will have the bot speaking with you. You can visit our social media platforms, which is your LinkedIn, your Facebook, X, and of course, as I said earlier on, is your WhatsApp. And then for more information, you can visit our YouTube channel, which is www.youtube.com/SARS-Tax. And lastly, you can go onto the SARS website, which I do find user-friendly these days. When I started in SARS, we used to run up and down to a tax act or a HUXM or a SILK. So these days, the actual website has a lot of information. So I trust this information that I've shared with you has empowered you to go forward with your tax matters and to remain compliant. I thank you very much, and I go over back to my program director.
Thank you. Thank you so much, Lindsay, for shedding light on the world of tax compliance. Our goal is to make it simpler, not more complicated than a tax return form. If you just joined us now, welcome. We are still talking all things tax obligations for newly registered SMME taxpayers and traders. Now that we have armed you, ladies and gentlemen, with the necessary knowledge, I think you will agree with me that it's time to tackle your burning questions. Officially, welcome to the Q&A session. This is where we are going to put our experts to the test. We have received quite an impressive number of questions, and our panel tried their best to answer them so far. And thank you so much to each and every one of you for being curious, because that helps us now to refine our processes and to ensure that there's clarity on tax obligations aligning with our strategic objective number one. And as promised, ladies and gentlemen, we are not leaving you hanging. We'll never do that. Our panel of experts is here to save the day. To the team members who are going to participate in the Q&A, when I call your name, please switch on your video and just keep it on for the duration of this session. All right, please join me in welcoming Paco. Paco, there we go. And then Mark. There we go. Lindsay. Lindsay, welcome back. And Krista from CIPC. Krista, welcome back. All right, last but not least, Linda. There we go. There we go. Thank you so much. Ladies and gentlemen, I think it is time now to dive into our Q&A. Remember, your questions and our answers together, we can make this compliance for tax and registration a breeze. And it is definitely giving straight from my inbox to you. And of course, to you, Paco, a taxpayer would like to know, are all businesses required to register with SARS, even though they're just starting out and they're pouring out money from their own pocket? Are they still expected to pay tax over to SARS with no income generated?
Well, good evening, ladies and gentlemen. Patu, thank you very much for that wonderful question. Now, short answer, all businesses indeed are required to register for income tax purposes. As long as your business is not a sole proprietorship, then you are required to register with CIPC. Now, the minute you register with CIPC, automatically you will get an income tax number. So you will be registered with the SARS, and now the next thing for you to do is to go over to SARS and make sure that you update all of your registered particulars. And if they need be, you also register a representative. So thank you for that.
Thank you. Thank you for your response, Paco. Now to you, Krista, understanding that the whole process of registration now starts at CIPC and then you registered them to get the tax reference numbers from SARS. So a taxpayer says they wish to start a company that will be specializing in cleaning windows at a corporate level and an agent that will be helping people who need gardening as well as domestic services. Is it possible to register all these activities under one name?
All right, there's a couple of elements. So firstly, let me just get a little bit of light on the camera. So the first thing is the name reservation. So in terms of the Companies Act, you do not have to specify what type of industry or what type of business activity you have, either in your company name or in your MOI. I know it was on the old Act that way, that you were limited to specific transactions. Under the Companies Act of 2008, that's not the case. The reason being is when the Companies Act was redeveloped, it took into consideration that companies is not a privilege, is a right to have a company. And we, in order to ease access to the formal sector and the formal markets, they dropped that requirement that you would just to be in that area. So you don't have to declare what type of business activity you have with the CIPC, either in your name or your MOI. But when you file on the BIS portal your annual return, we just want to know some idea of which industry you have for statistical purposes. So no, we don't have to know. Thank you.
All right. All right. Thank you, Krista. All right, Mr. Mark Rogers, what are the tax obligations that SMMEs have and which specific taxes are they required to pay?
Good evening, listeners, and thank you, Mr. Program Director, for the question. To answer that question, SMMEs may be subjected to various taxes depending on the structure and the activities. The most common taxes that we normally deal with for SMMEs would be your income tax, value-added tax, which is VAT, and employees tax, and provisional tax, which form part of the income tax, as well as your turnover tax for qualifying micro businesses. Thank you.
All right. Thank you, Mr. Mark. Lindsay, I think you touched on these during your presentation. What is the process for registering a business for a value-added tax? So a taxpayer would like to know how they can register for VAT.
Thank you again. Welcome. Welcome. Good evening, ladies and gentlemen, once again. Thank you, Patu, for that question. Like we said earlier on, you have two options to register for VAT. You can either do the compulsory registration, which obviously you're compelled to do if your turnover exceeds $1 million in a 12-month period or a shorter time than that. Then you can do the voluntary registration, when you have, and you can prove your 50,000 for the for any period. It can be for 2 months, it can be for 3 months. You can do it online. You can register online via the SARS e-filing system, obviously, or by visiting the SARS branch. Thank you.
All right. Thank you for your response, Lindsay. All right, Linda, a taxpayer would like to know how they can get their newly registered SMME. How can they obtain the customs code for their newly registered SMME?
There are various options on how they can obtain a customs code. First things would be there's a DA 185 that can be filled in with the annexure giving an indication of about 45 client types. They can register that way via the branch, and they can also do it via e-filing, which is a self-service. They can do it at the comfort of their own home. It is free of charge. They would then fill in the relevant information and the relevant annexure on e-filing at the comfort of their own home. It's quick, it's easy, and it's free.
All right. Thank you so much, Linda, for your prompt response. Back to you, Krista. A taxpayer says, I have recently visited SARS, and they said they require a certificate of registration, also known as COR 14.3 for their PTY Ltd. How and where do I obtain such a document? Is it available within the CIPC website? And how much does it cost to actually retrieve it?
Right, from the starting point, companies are required to keep their own records. So that core 14.3 is the registration certificate for the company, right? So you had to receive it upon your registration. You should have kept your documents in the first place. So the question is, if it's not your company, then why do you need it? And because it's not your information. And then it becomes what we call a paper-based disclosure. So there is a portal. You email your inquiry for access to the document, and then you have to pay for it. You pay per page. That's the 15.3. If, for example, it is your company, and you registered via what we call short stand, which is the basic company registration formats, it's supposed to be available on the website depending on what year you registered. Otherwise, what you can do is, if you're not quite sure and you've tried those portals, please log an inquiry with the CIPC. If you go to our website, www.cipc.co.za, to the main website, you'll see there's a button called Inquiry. Our inquiry system, unfortunately, is offline, so we reverted back to email. So if you click on the button, it will give you the list of all available email addresses for your inquiry. It's a little bit difficult to say. It depends on, as I said, whether it's your information, is it another person that's requesting the information, is it also when was the company registered? All the companies, it's still physical files that we have to go and access, so we have to determine that. But try those avenues, the website first, it should be there. If not, then go to the inquiry portal to get the relevant email address for assistance. Thank you.
Thank you, Krista. All right, Paku, a taxpayer would like to know, what is the frequency for submitting tax returns and where do they obtain the necessary forms?
Yeah, that's a good one. Thank you, Patu. So the frequency of a tax return depends on the type of tax product that as a client you are registered for. Now, for company income tax, that will be due for submission annually. So that means every year, and for a company, you have about 12 months after the financial year end or the year of assessment. And then for VAT, that one also depends on which category has been allocated to you on registration. So it can either be bi-annually, it can either be bi-monthly, or it can be every month. So depends on the categories, category A, B, or C, and so forth. And then for pay as you earn, that one will be due on a monthly basis. On the following month after the closing period, it will be due on the 7th, and then so forth. And then for provisional taxes, that one has 2 submissions which can be made in a year. The first one will be for the first 6 months of the year, and then the second one will be due at the end of the year of assessment. And then the one that you've been highlighting, which is turnover tax, that one will be due on annual basis. So you only make one tax return every year for a business. Thank you.
All right, just a follow-up question on that, Paku. Considering the fact that the frequency of tax return filing depends on the tax product, so what are the consequences now of missing a tax filing deadline?
Yes, I'm sure that's a question that everybody wants to know the answer to. Right, so if you do miss your filing deadline, a few things can happen. The first one is what we call administrative penalties, or admin penalties. And the amount of penalty that will be imposed on you it ranges from the minimum amount of 250 rands every month to a maximum amount of 16,000 rand. So that amount will be based on your taxable income. So it will be obviously, we're going to look at your last tax return, and then we're going to use that amount as the basis of the penalty. So there can be also interest which will be charged or imposed on you as well. Thank you.
All right, thank you, Paco, for your response. Mr. Mark, considering the fact that Paco mentioned that there are interests that are being charged, it means that now a taxpayer or a trader will be owing money to SARS. A taxpayer now is curious to know if they are owing SARS money, how do they now make the tax payments to the South African Revenue Service?
Thank you for the question. The most important thing that we need to first need to establish or make note of is that before you can make a payment, you need a payment reference number. And that payment reference number can be obtained via your statement of account. So the different methods that you can make payments, number one would be then your EFT, which is called electronic funds transfer, or you can make a direct deposit at the bank itself, but as well as online via SARS e-filing. So if you do a payment via e-filing, you have to set up your bank account on e-filing and make the payment from e-filing. Like I said, just very important that you have to have a payments or correct payments reference number before you make a payment. Thank you.
All right, thank you. Speaking of bank accounts, I'll direct this one to Krista. Krista, so a taxpayer says they registered a company using B's portal, I believe that's how you say it, and they got the documents, but they are still confused about the bank account because they did not receive anything regarding it.
All right, I'm assuming you're referring to that post your registration, there's an option that you can select a bank to help you to open up a bank account. And what happens when you select the bank you want to bank with, we push the data of your interest to the bank. We actually do not register your bank account. We just push the data for them. Unfortunately, I cannot say why that it may have failed. Maybe on the other side with the relevant bank, they've not been able to contact you. My advice will be is to actually go to the bank, use with any of the electronic options. Banks have got electronic options, and then directly open up the bank account that way. Sorry that you did not receive the service that you expect.
All right, thank you, Krista. Lindsay, a taxpayer would like to know what penalties can they expect if their business is non-compliant with the relevant tax regulations?
Thank you for that question, Patu. Okay, so firstly, non-compliance with tax regulations can result in fines, severe penalties, including fines, interest on late payments, administrative penalties, and of course, ultimately legal action by SARS. I know Mark went into the whole penalty thing about the late submission or the non-submission. That would be from 250 to your 16,000, depending, or also on the calculation of your taxable income. I just want to reiterate if a taxpayer or a company is registered for PAYE and they make late payments. So for example, they pay on the 10th of the month, but the payment was due on the 7th. They will pay a late payment penalty of 10%. And in that case, interest is calculated on a daily basis. So it's very important to remember that if you pay your PAYE late, you will have interest calculated on a daily basis and not a monthly basis. Thank you.
Thank you, Lindsay. All right. So a taxpayer says that they are looking for their tax clearance certificate and they were informed that they will lose the tender. They want to understand, is that even legal? Paco, can you please give us a response for this one?
Yes, of course. That's a very good one. So it is actually legal for any business associate, even any company, or even for a government to withhold or even to withdraw a tender award. So any business transaction or relationship that you wish to enter into, they may require you to prove indeed that you are compliant at SARS. So that facilitates your relationship with them. It shows that you can be trusted and so forth. And then they won't have any issues that they will need to deal with you going forward in the future. So it is quite legal for them to withdraw that, because the consequences of non-compliance are not only at SARS, but then they can venture into other business areas and relationships that you may have. So it's very important for any taxpayer or company to make sure that they are compliant. Thank you.
Thank you, Paku. Mr. Mark, how can a taxpayer access SARS services online?
Thank you for the question, Paku. SARS offers a range of online services that's available to taxpayer, namely e-filing. It's one of them. These services, you can find your returns on your IT-14s for companies and IRP6 for provisional tax that you can find on there. Alternatively, they can make use of our SARS online query system, which is available on our website on www.sars.gov.za. Thank you.
All right, thank you, Mr. Mark. Just a follow-up question on that. Taxpayer would like to know what SARS e-filing is and how does it work?
Okay, SARS e-filing is an online platform that allows taxpayers to submit returns and make payments and manage basically their tax affairs electronically. This is very convenient and it's efficient, and it's available 24/7, and you can do it from the comfort of your home. Yeah, thanks.
All right, thank you so much. All right, Lindsay, considering the fact that we have SARS e-filing that helps taxpayers to actually get the assistance that they want, and they can utilize it at the comfort of their own homes. Now, a taxpayer would like to know, where else can they get assistance with their tax-related questions?
Thank you. Thank you for that question. We offer various support channels, which include the website. Again, I did reiterate that in the workshop, www.sars.gov.za, which provides comprehensive information and resources. It's a very, very good channel, and there is lots of information. You can contact call the contact center. And lots of people moan about that, and they say it takes forever, but you can also request a call back. You can visit a SARS branch for in-person assistance, and you can obviously consult with a registered tax practitioner. And we can also just promote our services in the rural areas going out there. We also have our mobile tax unit. So they will advise you on the website. You can see in the areas, in the rural areas, outlying areas, when the mobile tax unit will be available as well. It will be on the SARS website. Thank you.
Thank you, Lindsay. All right, Paku, a taxpayer now wants to know, are they eligible to obtain a tax clearance certificate for their business? Or maybe how do they know that they're eligible?
Yes, absolutely. Short answer is yes. Now, you just need to make sure that as a business, you are compliant. So all your tax affairs have been taken care of, and then you can go into our SARS e-filing or SARS website, SARS online query system, and ensure that you request for a tax compliance status. So it's very important for every business to have, because that status can be used for things such as tender awards or business contracts or any other business dealings that you may have in line to your business. And even for the spaza shop owners who wish to register with their respective municipalities, it's very important because there is a requirement for them to have that they produce proof of compliance. So they need to go to SARS and make sure that they are compliant before they can go to their respective municipalities and register their spaza shops. Thank you.
All right, thank you, Parker. All right, Linda, a taxpayer would like to know how they can upload supporting documents on RLA, yes.
Well, on RLA, they'll have to go onto e-filing. It is a platform that allows them to upload documents, but there are standard requirements that is placed on RLA in terms of the format. The format should be either in PDF, docs, which is DOC with the X, XLS, LXLS, with the X at the end, and a JPG. and a GIF. So there are very specific outcomes in terms of the format that is allowed to be on e-filing, and then it can go onto the RLA platform, and we'll get assistance for free for us. If there's anything else that we require, then you also get your feedback on the dashboard and so forth. And in addition to that, there is a additional platform for uploading of documents, which was the SARS online query system. You find that on the website, and it's also easy and very friendly to use. Thank you.
Thank you so much, Linda. Thank you to each and every one of you. Unfortunately, we have come to the end of our Q&A session. Once again, thank you so much, colleagues, for your prompt response. All right, well, it has been an absolute pleasure hosting you all on this webinar. And I must say, I'm impressed by your eagerness to learn, as evident from the number of questions that we have received. If we didn't get to your question, don't worry. Our trusty frequently asked questions section on the SARS website has got you covered. As we have reached the end of our webinar, I'd like to express my heartfelt gratitude to each one of you for taking your time, for participating and engaging with us. I hope that we have met and hopefully exceeded your expectations. But before we officially wrap it up, I'd like to extend a special thank you to our incredible speakers, panelists, organizers, IT team, and other people who also contributed behind the camera for their tireless efforts in making this webinar a resounding success. And as a parting gift to you, ladies and gentlemen, remember that all presentations will be made available on the SARS website, and the webinar recording will be uploaded on the SARS YouTube channel. Don't forget to follow us on YouTube, X, Facebook, and LinkedIn. Would like to stay connected with you. But before we go, I'd like to hand over to Andile, who will provide some closing remarks. So please do stay with us for just a few more minutes. And after Andile's closing remarks, the moment that you exit the webinar, please remember to complete the quick survey that we have. Your feedback is invaluable to us. You know, as they say, it's hard to say goodbye, but all good things must come to an end. Thank you so much once again for joining us on this webinar. Until next time, stay curious and keep learning. I'm out. Over to you, Andile.
Thank you, Patu. Thank you once again to the presenters, the panelists, and our SMME partners for taking the time to listen and learn. And also, thank you to all the other curious minds that have joined us on the YouTube channel. We see you and we welcome you, and we hope you enjoyed tonight's webinar. So some takeaways from today's webinar include the importance of being compliant, not only with SARS, but also with CIPC. And how much easier than a paperless portal, such as the CIPC Biz Portal, to get you started to register your company, huh? So it goes without saying as well that as a business owner, you have to pay your taxes and remain compliant with your tax obligations towards SARS. That journey begins with registering your company with CIPC and registering for tax with SARS. If you happen to be a sole trader, which means you're more of a one-man or woman marching band, you don't need to register your sole proprietary with CIPC. But you have to pay your taxes with SARS because SARS still considers you a business, but it taxes you as an individual. The SARS website will have the tax tables there for you to see what rate of tax applies to you. And if you want to pay turnover tax, please complete the TT01 application form found on the SARS website if you qualify. Registering for tax can be done by using our USSD channel, WhatsApp, our e-filing platform, and at your nearest SARS branch. But remember that once registered, the onus is on you to file and declare with SARS and pay your taxes, whether it's turnover tax or income tax. For individuals, you're looking at filing your ITR 12, and for companies, it would be an ITR 14. Payment is also made simple through the e-filing platform or directly at the bank or via EFT. And if you've registered your company with CIPC, then make sure you pay your annual return. This is very important because it also helps ensure that your company's details are up to date. Now, your VAT registration, whether voluntary or compulsory, is dependent on the level of your tax supplies. 1 million and over, that's the magic number, then it becomes compulsory. Receiving your tax compliance status is made easier using e-filing, the SARS Mobi app, and the SARS online query system, where you'll receive a PIN from the TCS system that can be used to authorize and enable third parties to verify your tax compliance status. Now we know what types of companies are recognized by CIPC and SARS. We know that which channels to use to register with CIPC and SARS. We know the importance of remaining compliant and how to make payments. And we know under what circumstances deregistration applies. If at all, you're still uncertain about a specific process, or if the information still needs to settle a bit before you know and what you don't know, then by all means, go to the SARS website where all of the necessary information is there. And this evening's webinar's recording will also be available for you to refer back to on the SARS TV YouTube channel. Once again, thank you for availing yourselves. Thank you for your time. And please have an incredible evening. Bye.
Fellow South Africans, I'm addressing you this evening.
All your years of paying tax, you helped us overcome our darkest hour. You, along with every other loyal taxpayer, helped build this nation. Thank you for every life you saved and for every risk you braved, for giving our future generation a healthy start. When you saw many of our vulnerable communities, you provided for them. When you saw our healthcare workers on the front lines battling COVID, you rose to the occasion and gave them the tools to save lives. Without your tax compliance, we wouldn't be able to fight a good fight. Thank you for contributing to the important services our vulnerable communities rely on every day. To all taxpayers and traders, continue to pay your tax because it matters to millions of South Africans who depend on it. Your tax matters.